I'm a finance professional. I'm fond of the stock market. I like to invest. I like to encourage everybody to invest because, in my opinion, investing in stocks is a national duty. But I don't make money through consulting in stocks. I'm not a broker. I'm not a stock advisor. My forte is business finance, corporate finance. I spend all my time with large companies trying to help improve finance management practices. But having said that, I do nothing in professionally so far as the stock market is concerned. I must confess, long back, we did do something for a short stint. I was a fresh chartered accountant, started practicing newly, started taking interest in the stock market. Those days, I had a friend who was a sub broker, a cerebral kind of a person. You ask him a question, and he'll give you a lot of statistical information and intelligence inputs. So it was a pleasure to speak to him. And because we gelled well, and another freak accident came into the picture. I think I was the first chartered accountant in Pune to own a PC. I didn't know what to do with it, but we owned a PC. So this interesting connection between a sub broker, a chartered accountant, and a PC led to a very interesting development. This friend and I started a company providing, for that time, first of its kind, personalized portfolio management services, giving you tax linked advice. Now, portfolio management services, understandable. There's a sub broker with me. Tax linked advice because one of the two partners was a chartered accountant. And personalized because we had a PC. So, all the data was fed in. And this friend of mine used to do two things. He would come out with a list of shares that are worth buying. What is good for me is good for you, is good for everybody. So, nothing personalized advice in that. So, we used to bring out a newsletter. And this friend used to come out with names of companies that he thought people should exit, the overheated shares. Now, there we would say sells this company, our database will tell us which of our members held shares in that company. That person would get a phone call from us. So you see, I think we should sell. So very personalized. I remember those days, this friend of mine used to recommend a share of a company called Mazda Leasing. I think subsequently it became Mazda Industries. Leasing was a relatively new concept then. The first company to start leasing was, no prizes for guessing, it was called the first leasing company. And I think Mazda was close behind. I could be wrong, but I think Mazda was selling at 15, 17 rupees. And this friend of mine was recommending buy Mazda. It will touch 100. Tipped to touch 100. And we wouldn't just advise. We used to practice what we preached. So we told our members, buy Mazda, and we bought Mazda ourselves. Then Mazda went up to 25. Next newsletter said, buy Mazda 100. It will go to 100. Again, others bought, we bought. Then it went up to maybe 40, 45. I could be wrong, guys. The numbers I may be forgetting, but you get the drift. And then one of the stock market crashes came. What happens when markets crash? Everything crashes, whether it deserves to crash or doesn't. What happens during a boom time? Everything goes up, whether it deserves to go up or not. So discerning investors have something to do whether the markets are booming or they're crashing. During boom time, even shares that don't deserve to go up, go up. So it's a great time to get rid of the junk that you may have collected. And during crashes are wonderful to buy. You can pick up lovely shares at very decent prices. So when the market crashed, everything crashed along with good old Mazda. And Mazda came and settled at around 6 rupees or something. I realized this is not my cup of tea. We folded that company itself, exited. They said, this is not really what we'd like to do. Now, in my office, I've always been fond of stock market, guys, but I don't obsess over it. I don't go into it on a daily basis. Somebody in the office had the duty. Those days, no internet. So no newspaper would carry, Economic Times would carry the share prices. So we would maintain a file, very, very rudimentary, full scape sheet. Vertically, the names of companies whose shares we hold. Horizontally, for each month, one sheet. So 1 to 31. 1st Jan, 2nd Jan, 3rd Jan to 31st. Every day when the newspaper would come in the morning, this person's duty was to plot the price against the company's name And once in a while, you pick up that file, so rudimentary. You look at that and you get a fair idea, is the market going up or coming down? Every time you look at the file, Mazda was a straight line, 6 rupees, 6 rupees, 6 rupees, 6 rupees. One day, maybe 2 years, 3 years later, I was going through the file and I saw Mazda 8. Guys, 6 becoming 8 is a huge jump. So curiosity went up. Mazda, movement in Mazda finally. The next day's newspaper, when it came, you saw Mazda became 10, then it became 11, 12, then it became 15. You're wondering what's going on. Mazda is moving up. And the following day, a letter arrives from Mazda that they have a rights issue. 1:1. And you put two and two together. All right, they have a rights issue. So obviously, the company is propping up the price. If you're going to sell a rights share at $10 and the market price is 6, who will subscribe? So it has to be attractive. So what's the natural reaction? Natural reaction is tear the rights offer and throw it into the dustbin. And then Mazda continued to go up. 15 became 70, 20, 22, 25, 30, 35, 40, 42, 43. Then it fell a bit. I must have explained this principle in the past. Sell on the second fall. Buy on the second rise. Markets go up, come down, go up, come down. So by my principle, when the price fell twice, around 42, 43, 44, came to 39, 40, we said, I think we should sell some. So I think I sold half my holdings. And then it started going up again. 45, 50, 55, 60, 65, 70, 75. And hit a plateau again. It came down a bit. Then I said, it looks like now I'm getting greedy. We have now recovered not only the investment, but the holding cost, the interest cost, everything. Sold the rest of the share. And then Mazda started going up again. It went up to 80, 85, 90, 100, 150, 200, 300, 400. Went up to 1500. I'm trying to illustrate the price that we pay when we don't do research. And we go by assumptions. Oh, rights issue, company must be propping. So easy to say such things. Tear and throw it away. What we didn't realize is that Harshad Mehta had bought into the company. Many such stories, guys. Those were exciting times. Time permitting, I'm going to share more such stories with you.